What up, everybody? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. Well, I have been out for a couple days. I've been busy doing some personal stuff, but I wanted to come back in here and just kind of give you a little bit of an update. My last video, I said we had a market rally coming in, it looked like, and we did. It came in short-lived, and market scattered, freaked out, sold off as of today, which is Wednesday. When I'm filming this. Actually, it was a really bad day for the markets. Me personally, I had a really good day. I thrive on this kind of volatility. I'm a trader, so I'm on a win streak. I'm actually crushing it up and down. I'm doing really well on this volatility, but I'm not holding. I'm not doing things the normal way that you would do it in a bull run. I'm doing it the way that you would do it in a bear run. And I teach you all of these tactics and strategies, not only on YouTube. I actually gave you a bear market survival kit on how to work with this. You can go to my tutorial section. I've given you all kinds of really helpful tips. But I have courses too that are really deep and detailed, and the link is in the description below. You can also find the link to Webull, and right now they're giving out up to 100 stocks on my account because of the Webull birthday, which is really cool. And you'll find a Coinbase link in there too if you want some free Bitcoin. But yeah, I mean, look at this. Weak earnings, inflation fears send Dow sliding more than 1,100 points. I mean, it was close to 1,200 points. And I'm looking at the futures right now. They are down, and yeah, it ended 1,155 points down on the Dow. 4.03% on the S&P and 4.73% on the NASDAQ. I've already told you guys how to play it. I've already told you exactly what to buy to make money when it goes down, and to weight your portfolio with more of those than longs because you're in an overall downtrend. It's hedging, okay? But when it goes down, you make a lot of money, and when it goes up, what you do is you pull off hedges, or you add to the longs and you weight it that way. And then you just, if it's going to go down, you pull risk off of the longs and let the hedges run. And I walked you through that. We've done Wheelhouse Wednesdays, group trainings. We have courses on it. Plus, I've made multiple YouTube videos about it. You can make money every single day in this market if you just know how to navigate it. You got to be a tactician. You got to know technicals. You definitely need a system. But I'm your guy. I'm putting big numbers up on volatile days like this, and I'm pretty excited. $57,067 on Wednesday. It's good. I mean, I've had a bunch that are in the 40s. These big days like this, that's I make a lot of money on those days. Those are my favorites. Up or down, I don't care. You're gonna know kind of what's going on in the pre-market. And the way that I do it, by watching all the indexes for the whole day, but on the minute chart, so I can watch it. I keep an eye on that, and I can see when they all start to move. And then I trade in and out with certain conditions and signals hourly. Okay, my entries and my exits. I'm first in, first out. Okay, I'm not waiting for, if I'm stuck in a position, I'll wait for the daily to go bullish, which could take months from now. That's why I don't have a lot of longs right now. I'm day trading the longs. I'm holding the inverse hedges, the shorts and the inverses. Doing really good with that, guys. I could teach you. You don't have to lose money. You don't have to be scared of this market. You can make a lot of money. You just gotta know what you're doing. Okay. Okay. So let's go take a look at the indexes real quick and just see kind of what they're looking like. Go take a peek at those lower highs. I'm sure there's a couple in there. See what percentages we're down, and we'll go from there, okay? Right, here we are. Let's look at the Dow. Okay, holy moly, look at this. Can you guys see how thin that, look, it's as small as my little line on the mouse. See how thin that little line of green was? Green means bullish. It immediately went to red right after. This one crossed, this one just dropped. So, yeah, I mean, literally major sell down, pivot up. Like I said, there would be. I could see it coming in the indicators. Thought it would go a little higher, to be honest, at least to here. Remember, I said that in the video. I was like, it could go to here and reject. It could go as high as here. I wasn't sure. I didn't think that it was just going to butt its head right on this line, which if you notice, this line was, when it made the first, well, I guess it's the second lower high, but it was a significant one because it was where the primary trend changed. If you notice when it came all the way down, it touched this support, and then it came up and it butted its head and was rejected on that primary. Came down, came up, made this new swing high, came down, higher high, broke out, did this whole coiling thing, and then on this one, it butted its head here. It broke down below, and then rejected again. So it rejected here, and then it rejected again here. I kind of explained this to you guys like way back here and a little bit more in here. What happens when you make a new primary trend, they tend to like butt their head on it and walk their way down. Now, nobody really knows where the bottom is. I'm going to just make a prediction where I think it is going to be. I think it's going to be the peak before COVID. Okay, so I think it's going to be 29,743. I think we're going to break this support. We're going to, we're going to play around. We're going to end up breaking it. We're going to bounce. We're going to end up breaking it. We're going to come down to this one, and then we're going to bottom. And then it's going to be like this whole like up, down. It's going to grind and then start to take off. That's just what I think. Currently, and I could totally be wrong. The reason I'm saying that is just from looking back, 100, 130, 125 years in charts and just seeing what these really bad, aggressive sell-offs can do and where they land and how they kind of look. And there's a lot of similarities, and a lot of times they'll just go back to that previous peak, and that'll be like a major support. So it's unfortunate, but that's where I think it could go. Now, we're currently down 13.56 on the Dow, which is over 5,000 points from its high. That's pretty gnarly. Yeah, but I mean, guys, Dow. Every time that the Dow goes down and it's red, you make money, okay? That's what you got to play there. Let's look at the Russell. I don't have all the lines built on there, but I built the most important lines, okay? You got your previous high. These two right here are the range bound of 2021, the breakout, the fail, okay? The breakdown, the resistance, the touch, the resistance, the breakout, the fail, and then, broke this double touch, double bottom, and then boom, created this new one for a pivot. So I kind of marked them all on there for us. We're currently down 30.76% on the Russell. The one you want to own for that is TZA. Okay, the Russell did fire off a buy right here, and we bought it, and the rally is small. And the volume was pretty aggressive on the Russell, but you're actually on the small caps, you haven't crossed over like you did on the Dow. The Dow is like, abort. The Russell is like, let's see what happens tomorrow. And I have some small cap stuff. I have DraftKings. I just did a sick trade on NEO. I did a sick trade. I got in on NEO like $2 back, and I pushed into it heavy, and I actually exited today way in the profit. It was a perfect exit. I'm really pleased with the exit, and I'm going to trade it again. Because, and we'll go over NEO, and I'll show you why. I have certain ones that I'm just trading in and out of on the hour when certain conditions are met. I'll show you what the conditions are, try to help you guys out. And I'm reading stuff on Facebook and Reddit, seeing it on the news. These guys on Bloomberg, I mean, God, you got to love them, but I don't know how they became like chief economic strategists and CIOs of these major institutes. They're like 6 months behind me on everything I say. It's like, I told you back in September there'd be a recession. They're like, no recession. Now they're like, oh, there's a good chance of recession. I told you when they say 3 rate hikes to the federal fund rate, it's a signal, like a Masonic signal. You got to pull your money out. What happened? $6 trillion got pulled out, but they were still on there saying, no, we don't need to go to cash. We dollar cost average. Actually, you don't dollar cost average in a bear market. I tried to explain that to you. It's a big myth. And yeah, you don't do that. You wait for the bottoms. And I also showed you how to spot bottoms, with your indicators. So This is a volatile market. This is a trader's market. If you're trying to hold in this market, you might as well just not look and just come back in like a year and a half or whenever. Maybe just check back once a week. Save yourself the stress. I like the volatility. I like these crazy volatile swings. You make a lot of money with this stuff, especially when you're doing leverage bears on a triple leverage. Remember, things go down in a bear market 4 times as fast. Multiply that times 3, that's times 12 times your money. You're getting 12x your money. And then if you're using margin to go short, you're actually doubling that. And you can get, I guess you could call that 24 times your money. You could get paid. More people make money in the bear market. Smart money makes money in the bear market, just so you know. Guys, you make a lot of money in the bear market. Also, when it turns into a bull market, the financial crisis back in 07, 08 was one of the largest wealth transfers ever. Okay. I'll be here for you, and get in the Discord, guys. I'm trying to help everybody. We got a good crew in there. There's really good people. I feel like I'm not even needing to like teach them, because they kind of know like what's up. They know. Like, I talked to one guy, he's like, yeah, man, I'm 80% cash. I'm feeling good. The other guy's like, yeah, I'm inversing. And the other guy's like, yeah, I hit this one perfect. Yeah, I shorted Aave. Like, they're making money. They're showing me the profits. One guy showed me a profit of 66% today. They're just using my system. My system is crushing it. It's killing it. So you guys get in there if you want to learn. I'd be more than happy to help you and, show you some stuff. So, again, some of the small caps that look really good, SoFi, and I'm going to show you why. SoFi is actually bullish to the daily. You know how I say don't buy an average down, don't buy the dip, don't DCA until you get bullish to the daily? SoFi has achieved bullish to the daily. Another one that achieved bullish to the daily is Playboy. I'll show you a couple. DraftKings is almost there. We're like one day, if we have one green day, we'd probably be bullish to the daily and have signal strength. So we're super close. Okay, so some of those are small caps. Remember, small caps went first. They went early 2021, like February is when they started to break, and small caps break first, then NASDAQ, then SPY, then Dow. Okay, we're all the way to the Dow now. Okay, and once the Dow breaks, it's recession. Okay, and then after recession, it's housing, and it is foreclosures, and it is layoffs, and it is bankruptcies. And then the Dow leads you out, okay? And the credit market's in there too. And right now the credit market is thriving because people are taking on more credit. So they're doing good, but eventually what happens is people get laid off, they lose their job, and then they don't pay those people. And that just is a whole bad scenario for the consumer credit, for them to be able to buy new homes and take out credit, and it just goes round and round to more bankruptcies and potential bailouts, and it's just we never learn. We never learn, and it sucks. And I'm sorry to have to tell you this. From day one, I have not changed my tone one time. I'm not like these other guys that are like, oh, oil's never going to go past 100, and then it goes way up, or hey, we're only down, we're only down a little bit. Everything's gonna be fine. And I'm over here being like, dude, get out of the market. And then finally they come over here and they're like, yeah, maybe I messed up. Like, no, I'm telling you, because I study history. I'm like a historian kind of guy. I love it. I love history. I love civilizations, all kinds of history, especially stock market history. The reason that they did this, and I still don't know anybody out there that's saying this, except the guy Tom Nash. I think he did it in a video a long time ago, back when we were back here, and I respect him for it. He called it correct. I don't know who said it first, me or him, but he's right. The reason that they are doing it, the reason they're raising the rate so aggressively is to get inflation down, but it's also to protect the world reserve currency. Look at the DXY, guys. Look at the dollar. The dollar has come down for 2 days and it's still at $104. Come on. It was up at 105. Like, this is insane, right? And what happened? We got a rally when the dollar came down. What did I say? The market won't rally until the dollar comes down. You got to pay attention to this. Crypto, especially Bitcoin, does not rally unless the dollar comes down. There's a divergence there. They're correlated inversely. Okay, these are really important things to look at, pay attention to. You can look at a ton of stuff in the news. We can go over news, we can go over opinion, but honestly, the way it works is like keep an eye on your indexes and go watch that bear market survival kit on how to like pivot in and out and how to hedge and have, I think I said return on equity in that, but I think I meant equity curve is what I meant to say in that video. But anyways, look, the dollar's come down a little bit, market went up, but the dollar is still very strong, the market came down. So yeah, I mean, yeah, so let's go look at the SPY. What happened with the SPY today? Okay, SPY is currently down 17.26. We're pretty much almost at a bear market on the SPY, guys. Everything says sell on that. That's just like it's coming down further. SPXU or SPXS. Those are the two that you want for the SPY when it comes down. That's what I play. And then here we are on the NASDAQ. For the NASDAQ's down 28.39%. Let's just call it an even 30 at this point. And I think that the NASDAQ could come all the way down to this blue line, which is 9,871. So yeah, I think that we could be doing something like this. Boom, boom, boom. A little further, boom, 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 and then it's staying before it takes off. Yeah, I know, it's filthy. You want, what's the one that I use with that? SQQQ. Okay, and then I have a couple others that I play here. I'll show them to you. Okay, I'll show them to you. All right, I have them in here. These are the ones that I currently have and I'm trading. I sold the Neo today, but it's still in here. I didn't delete it from the list. BBAI I picked up. Why did I pick it up? Okay, so I trade in and out on the hourly, and I saw major momentum coming in, and I like the middle right here. When it changes colors and it goes to the middle, you're at the beginning of a reversal play. So I picked it up, I made an alert about it, and boom, off the chain, 21.18%. Okay, SOXS. Same thing. Look at the charts, guys. Look at the charts. What do you see? What do you see? It came way down and it just went blue right there, and look at the price action heading up. This means that you're betting against the semiconductor industry. How much did I make on that? 14.93%. Okay. Next one, and this is the one I have a lot of money in right now. I'm currently a little down. I was down a lot 2 days ago. I'm barely down at all right now. And actually I bought more of it. It's LABD. You're betting against the healthcare sector. It went blue right there, and it's on its way up. Okay. Webs. Here's one I wanted to tell you about. I wanted to tell you about SOXS, LABD, Webs, TEX, TZA, SDOW, SQQQ. DRV is betting the real estate market's going to come out. We're going to talk about that. The real estate market, just like they say, oh, we're not going to have a recession, or the real estate market's only going to cool. No. No, I know a lot about this. Like, yeah, it's going to decelerate, which means it'll still go up in value, but a lot less. Okay, it's going to do that, and then it's going to like completely peak, and then there's going to be a little bidding war, but to the downside, you're going to start seeing all the signs in the yard, and then it's going to come down. And the whole thing about Target, just so you guys know, the whole reason that the market sold off is because Walmart and Target retail numbers didn't come in that good. And just to give you a nutshell on what it is, and I'll tell you what's going on, and then I'll play a clip for you real quick. Okay?
Paul, your thoughts on this? I mean, it's really the retail sector, those earnings reports that are really suffering the most today.
Yeah, exactly, Zane. You had really lousy earnings from Target this morning, triggering this massive sell-off. And that comes one day after Target's top rival, Walmart, also reported poor earnings and a weak outlook. So you're looking at both stocks having, with Walmart yesterday and Target today, their worst one-day decline since the market crash of 1987. That is obviously a very sobering fact to hear.
Okay. So Target and Walmart, they're seeing slowing consumer demand for particular items that you basically don't need, okay? Stuff for your home, name brand products, things like that, okay? The private label stuff, the cheaper stuff's getting picked up, and that is because, lower income people shop there, and lower income people are getting wrecked by this inflation, and that's all they can afford. It sucks. And it's not right, and it's not fair, and it just is what it is. Like, they're being forced to change the brand and can't spend more there because they're spending more on gas and food, So yeah, it's showing up in the numbers just like I said it would. Now, here's the real kicker. Here's the real kicker that I'm going to tell you. I'm going to break it down. I'm going to drop a straight mental taco on you. The reason that when Facebook and Apple and PayPal way back in like September of 2021, when they didn't have good earnings, I said that is the first warning shot over the bow, because that signals to smart money that there might be a deceleration on earnings and that stimulus money slows down. Another quarter goes by, you have more drama. At that point, they start selling off high multiple stuff, getting out, de-risking. Still, no talk of we're really having a recession, right? Rallies, nobody really knows where they're at, kind of zone that we're in. And then you get to retail. And you got to understand that this is a big one, okay? Because all that's left is retail consumer spending, real estate or housing, labor, the labor market. That's all that's left. Everything else is shot out the window for a recession. So when you lose retail spending, okay, remember, this is good for inflation. This means that inflation will come down. I had mentioned this in multiple videos. I said, all roads end where the consumer says, I cannot pay. I literally said it. I said, all roads will end at a moment in the future where people just say, I can't afford the gas. I'm not going to go to work. I'm not going to live in your city. I'm not going to buy a new home. In fact, I'm going to sell my home because I have equity that makes me feel like I have money, but that's going to be coming down really soon. Okay, so the consumer is not able to afford, and it's showing up in the Walmart earnings, and it's showing up in the Target earnings, and it's going to show up in everybody's earnings, guys. The supply chain shows up in the earnings, and the demand is going to show up in the earnings, and the inflation is the common denominator that is like in the middle, okay? So the prices went up, people couldn't afford it, and so now that you have that one removed, which basically when that one goes, you know a recession's coming, okay? And all you have left is the housing and the labor. Biden and Jerome Powell already said they need to slow down the labor market. It's too hot. What does that mean? Okay, that means that they are going to, they need less people to work. It's too hot, basically, okay? That's going to happen naturally. Why? Because inflation, because they're being priced out of the market, because they can't afford housing, rents, they can't afford the gas, and just naturally people are going to quit, and then there's going to be layoffs because the earnings per share and the demand slows down, so there will be layoffs. Then the then the labor market cools, and you're in a full-blown recession. Remember I said stock market, then, so it goes around the world. This is how it goes. It goes Russell, small cap, then it goes NASDAQ, then it goes SPY, then it goes Dow. We're on Dow. Okay, then all these little subsets happen like Target, Walmart, earnings per share, and all this stuff goes down. Okay, then you go recession, okay, which we're already in, by the way. Just they're not like willing to admit that yet. They will here soon when the next GDP report comes out, trust me. Especially with that COVID lockdown, you can't get away from it. You have to be an idiot to think that this next quarter on GDP is going to be up with the COVID lockdown with a huge importer. Come on, smart money already knows. That's why they're pulling trillions out of the market. You've got to listen to me. You've got to be buying SOXS, LABD, Webs, SQQQ, Text. You could be making so much money right now if you do that. Just do that, okay? And if you have your longs, I'm not saying sell your longs. I'm saying don't average down and don't buy the dip. Wait for a bullish signal. So as an example, let's find you one. So here's Playboy. Let's say you wanted Playboy. Okay, so Playboy said sell right there. Okay, it said buy right there. That's on the hourly. Okay, now let's say you owned Playboy and you were way down. I don't ever want you to be buying the dip and averaging down through all this pain, because you're just adding more shares, you're adding more pressure down. That means even though you cut your percent goes faster down. It's like the idiot method, okay? Only pros don't do that. That's like some other retail thing. It's novice. This is what I'm talking about right here. See how that went blue on the daily? Okay, that would be your first time that you could average down on it. Now, I don't like to average down while it's heading down, not in the direction of price action. I like to let it go a little bit longer and curve. Maybe this will be a little higher, but you're measuring in safety. It's kind of like this right here will basically calculate a follow-through day. I'm big on follow-through days. I'm big on everything O'Neill, okay? And this right here, this kind of like, I mean, you can see it in the volume, the price action. Don't get me wrong, but this will also, by the time it curves, it shows a reversal. It calculates the sum less than or greater than the mean on price action, okay, and money inflows and stuff like that. So Playboy just got it. Another one that just got it is SoFi on the daily. Look at SoFi. Just got the blue and fired out 3 buy signals. So there are some. And look, DraftKings is just about to get it, and Lucid has it already. Lucid just got it right there. See, right behind. So Lucid just got it. So that's why my longs, I'm trading, but they all are bullish to the daily, but I'm trading in and out on the hourly. So when this is blue, you're actually trending up, even though it appears you're trending down, because it's the very beginning. So, but because it hasn't shown total strength where the ribbon is blue and the 200, you're above it, I'm just trading in and out on the hourly. So like right now, this thing is showing a reverse that it's going to come down, but I already know when I back up from the minutes, it made a serious bounce off of here. And you can see it on the hourly right there, but check this out when I go to the minutes. I'll show you. I watched it today. Came all the way down. Boom, boom. Off to the races. Okay, this is a big support here. And it validates that we are starting to trend up. It just wanted to confirm the touch, and then I think Lucid's going to run. So I picked up some select ones, and what I do is I'm overweight. I'm 2 to 1, at least 2 to 1 on the inverse. Okay, so think about it like this: if you have equal amount of dollars going short and equal amount of dollars going long, and it goes up and it goes down, and you're basically just holding your account at zero. You put a lock on it. It's not doing anything. But let's say it goes down, okay? These are your shorts. If it goes down, then you just pull off your longs and you let the inverses go up and you make money. And then when it wants to go up, you just put on the longs and you pull these off and let them go up. Now, let's say you have longs that are down. Well, you probably are very profitable on the shorts, and then the bullish day comes and you just sell all these and you put all the money in there and you springboard out, and as soon as it goes down, you pull out any of the profits that you bought low and you put it back into the hedge, and you just climb out like that. That's how you got to do it. It's a little tactical, it's a little tricky, it's a little advanced, but again, I'm here for you. Jump in the Discord. I'll show you what's up. All right. So yeah, look, 21.18% on BBAI, SOXS 14.93%, LABD 14.8%, Webs 14.79%, SQQQ 14.53%, TEX 13.61%, SPXS, that's triple leverage SPY to come down, 12.05, TZA is a triple leverage the small cap's coming down, 10.71. I mean, I crushed it, guys. SDOW, 10.55. DRV, betting the real estate market's going to come down. And by the way, DRV, I can see smart money accumulation on that. I don't need to hear it on the news. I already know the history. I've already been through recessions. I've already been through all the market phases and cycles. I know what time it is, guys. Real estate's going to come down, period. Get ready for that. And the smart money is accumulating on DRV. Check it out. This is the daily. Look at this thing. Already coming in above the 200. It doesn't go above the 200 often, okay? So when you see this below the 200, this is the bull run, okay? This is real estate's doing good. When it goes above the 200, real estate's doing bad, and you're at the beginning of the accumulation phase. Smart money's getting in there. I'm in there, and I'm up a lot on it already. Well, I don't know how much this was. Okay, so today I'm up 2,670 on it, but I have been trading it. Okay, so I'm up 17,500 on it so far this year, but I've traded in and out because I go on that hourly. So, as an example, okay, this right here, I ran it, okay, and then I got out and I just got back in. I literally just got back in today, which was a few hours ago. Even though it hasn't gone blue, I could just tell because my vortex crossed, and I trust the vortex. Plus, I got the green signal here. So DRV is a really good one for you. All right. What else? Okay, so FAS, okay. So FAS is betting that the financial markets will come down. Now, why would financial markets come down? They're raising the rates, Chris. Yeah, it's true. They're raising rates, which means that they would make more margin. However, because consumer demand is slowing and the labor market needs cooling, and we're going into a recession and people are about to sell their homes, there's not going to be as much lending, even though the lending that they do, they'll make more money on. So betting against financials is actually looking good right now too. And if you look at it on the daily, it's also above the 200 under accumulation. A little bit spotty volume. It's not quite as aggressive on that volume. Look at the volume on the betting against the real estate market. I mean, come on, guys. It's like right there. Like, that's the answer. That's like just put your money in there and just get paid. Like, it's like a no-brainer. All right, what else? Tesla kicked out of the S&P 100 ESG portion. I got a little article here somewhere for us to look at. All right, so here we go. Tesla got kicked out of the S&P 500 ESG index. Elon Musk calls it a scam. Yeah, it certainly seems like a scam since he's like bringing electrification and the pioneer of electric vehicles, in my opinion, but it's just my opinion. Let's see what they're saying. I know, I don't need to read it. I know a little bit about it. So basically, like, they don't like the way that he's handled some of the lawsuits pertaining to, the self-driving and, just they're coming at him from like a conduct place. And here it talks a little good. Tesla, of course, is responsible for shifting the entire car industry towards electric vehicles. But a few factors contributing to his 2021 ESG score were a decline in criteria level scores related to Tesla's lack of a low carbon strategy and codes of business conduct. Petty put him back in. You guys are ridiculous. This is crazy. So anyways, Tesla's like going down the drains. And if you were in my group, you would know that I had told everybody at like around $1,100 to go short on Tesla. I didn't want to talk about it too much on YouTube because I didn't want everybody to get all like butthurt. But basically, like, I shorted the first day, made like $60 or something. And I shorted again, made a bunch of money. And like, this is a straight up short. And if you were short from 1,100, it was right in here somewhere. No, it was right here on the first lower high, 1094. If you shorted there, when I was explaining to the guys in the group, you made that first lower high right there, you would be 1,100 and it's at 709. So that's, just call it $400. $400 a share. Got to listen to your homie here. Dude, I got these technicals down, man. I know what's going on here. This is like not good. Now, I don't think you should like necessarily just short it more, because it's right at a point where it's got these multiple touches, so it's at a level of support. However, if it does break that, I really think this thing could come all the way down to 539.24. I said it. Sorry, I've made a shitload of money on Tesla. I love Tesla, but I'm a directional trader and I'm non-emotional. And that's why I'm able to crush the game. So look, we're going to leave it there. I appreciate you watching to the end. My name is Chris, and welcome to the Wheelhouse.